Hello, this is Manash Patel with IMTF Trade. Today is July 30th, and we're doing the market update today. Reason why is the U.S. Fed's got announcement tomorrow, I believe, and it's supposed to be a critical announcement. The reason why is interest rates possibly can drop, blah, 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 due to all the fundamental reasons. Not much of a fundamental trader listening to any of that stuff, just looking at price action, because that's really what matters, what people do with their money. So what we're going to do is we're going to analyze the market, see exactly where we're at, and kind of go from there. So first thing we're going to look at is the E-mini S&P 500 futures. As you guys can see that we're making all-time highs here. Okay, so really we have no history. We have no history to base our support resistances on. The only thing you really can do is sit there and look at Fibonacci levels, and that's pretty much what we're going to do here. So we're just going to do it, keep it simple, keep from the top there, and then go to the bottom here. And you could see we're already at one critical Fibonacci level right there, which is 127.7%. And a lot of times when you have fake breakouts, what will happen is they'll get to the 127% Fibonacci, and at that point they stop. So we're at a very critical level there. Next level is, of course, if we break this, we now could start another trend to the upside, and we could actually get to these levels here. The next one's going to be at basically 30.7950. Okay, so I'm going to delete the Fibonacci there, and kind of you could see the levels there. So this is the key levels there. Let me enlarge the screen here so you could see it, and that's the critical level right now. We're stuck at the 25.75. The support we're doing is this multiple time frame support, which is 29.9475. So based on the charts and everything, we're at the most critical level here. It's do or die. We got to start breaking this resistance. If we do not break it this week, then we got a high probability we're going to come back to support, and then at that point we'll have to see exactly what's going on. But we did sit there and move off this support here very, very fast in the last couple of months, and that's not a good sign at all. Let's quickly look at the daily to see what we're getting underneath the hood. And you could see the same scenario here on the daily here. You could see this is just kind of dwindling around. You've had a support here. You could kind of see there was a resistance level here roughly around 29.69. We broke that, kind of consolidated. Then we went to another high and so forth. If you look even lower on the 4-hour, you could see that this resistance level here, how well we've been holding it here, and we've yet to break it at all, which is not a good sign. We broke the 240-minute support, which is right here at 30.12. But remember, a lot of volatility can come in, and we're pretty much in this consolidation pattern here between these two levels right now. So it could sit there and come back to here, and then the announcement could jack it up there. We really don't know what's going to happen between now and then. So the key things is we kind of have to wait and be patient. There's no signals as far as this is concerned on which way it's going to go. Here's a VIX here. This is the bottom zone is between 1960 and 11.5 is the bottom zone. There is another support here at 12.6, which we've kind of just been hanging around, not quite getting to the 11.5. So this is when the markets are basically bullish. Remember, the VIX is inversely related to the stock market. Okay, so that's kind of where you have this. So this bottom zone between 1960 and 1260 and 11.5 is basically the bullish zone. We've gotten to this support here at 11.26, and that's kind of where the market's reached the all-time high. And now the thing is, we look like we're bullish right now, but this is weekly. Anything can happen. We still had a high probability getting to 11.5, believe it or not. So with this Fed announcement, we could sit there and possibly get that and then hover around there. So again, the VIX is not really telling you anything either. Because you kind of got to this first minor support, which is 11.26. It could sit there and hold it like it was doing here, but it also could sit there and go to high probability to go into 11.5. So right now, we're kind of, if you're looking at probabilities, you still have a high probability where this market still can sit there and go higher as by the end of this week. Okay, so let's look at gold as another. Here's gold futures on the monthly chart. If you guys know, we've been following gold a lot. The critical resistance level which it broke, which is now support, is 1352. and then the critical resistance level, which is around 1427, kind of where it's at. Right now, it looks like it closed above it. However, you need to wait for the end of the month to kind of see what goes on there. So we're waiting for the end of the month to kind of see how far it's going to sit, if it's going to close above it or below it. And with this Fed announcement, it could really rock this market too. So it's going to be interesting to see exactly where gold's going to kind of end up. But if you notice one thing, the E-minis, gold, and the VIX are all at support resistance levels. So it's very critical levels right before the Fed announcement. That means any volatility that the Fed causes can sit there and cause it to break one way or another. If they really do no announcements, we're going to pretty much remain in this consolidation pattern. So there's nothing new here that we're developing at all. If you look at seasonality is concerned, this is basically the dollar. This is from Alert Trades. You could see the dollar in July has a 69% probability being bearish. You could see for the last 3 years it's been going down as far as the dollar is concerned. Still has a high probability going down. But notice one thing: you've never had 3 years or 4 years in a row being bearish at all. So if it does sit there and the dollar does go down, then that will be an extreme case where you haven't seen that in the last 10 years. Let's go look at quickly at the dollar charts. Here's the weekly chart for dollar. Whoops. So here's the chart for the dollar here. You could see here it had a resistance roughly right here. Let me mark that off real fast. It broke that resistance a couple of times here. A lot of people thought this was maybe a head and shoulder pattern when price got here. Kind of broke it here. It's kind of sitting there, not quite getting to this resistance level here, which is a multiple time frame resistance at 98.97. But this is well on its way there. And this Fed announcement could kickstart it to get to that last point, to that resistance level to retest the high there. So we're getting to a point where the dollar is getting back to its all-time high, which is going to be interesting to see. So we're definitely waiting, watching what's going to happen there. But your basically support for the dollar futures is 96.60, and resistance is basically going to be 98.97. So if you look at the dollar here, and then you look at the seasonality here, even though this says bearish, remember we haven't had 4 years in a row being bearish since for the last 10 years. So there's still a high probability that this thing could still go up, but we have to kind of wait and see and go from there. If you guys have any questions, you could email us at info@eiicapital.com. Thank you.